So DC2, we're an integrated provider of data center and cloud services. Pretty much everything we've done to date has been out of our tier 2 data center in Osborne Park, a northern suburb of Perth. But just 2 weeks ago, we opened our new tier 3 facility, which is in BIBRA Lake, which is a southern suburb of Perth. DC Modular is our high density modular data center division. Essentially what we do is build containerized data centers and put them directly on power generation sites, think solar farms, wind farms. We also have DC Soft, which is our software arm of the business. And what I'll talk about there is what we call the Microsoft opportunity. It's a Microsoft SPLA reporting tool that we're developing. Next slide, please. In terms of our capital structure, we listed last year, November of 2020, at 20 cents a share, currently sitting between 30 to 32 cents a share for a nice bit of capital growth. Our market cap's just under 20 million. Relatively tight share register. The top 20 make up 56% of the shares on issue. But what we get really excited about is management and the board. We hold 1/3 of the company. So we've got skin in the game and want to see this company succeed just as much as every other shareholder. Next slide. In terms of the management and the board, we have Justin Thomas. He's our MD and one of the co-founders of DC2. Previously had a software business that he sold to RP Data, and also previously built a data center down in Henderson, which he sold to Amcom Group. They're now part of the Vocus Group. Cam McLean, our non-executive chair, has decades of experience with service-based businesses, including HP. Myself personally, a number of years ago, I started a web hosting business, which I built up to just under 4,000 customers and sold to Australia's largest private web host a couple of years ago. Mike T, our general manager, he started a number of IT businesses, and Mark Dignam, also one of the co-founders of DC2, started one of the first ISPs in Australia, which he sold to IONET. Next slide. So pretty much up until the point of listing, everything for DC2 was self-funded. There was very little external capital growth, and that got us to this point here. We've had that nice, consistent increase in recurring revenue. The last couple of years, we have had some one-off revenue, which we're definitely not adverse to. It's mostly hardware sales, servers, what have you, and we'll take any money that comes our way, but we really do like to focus on increasing that recurring revenue. Next slide, please. I mean, the data center and cloud services market has been growing at double-digit growth rates for a number of years, and that's expected to continue. There's been a big shift in business mindsets where traditionally you'd have your offices with their servers, their hardware on site in a comms room. That's now changing to a cloud-first policy. Everyone's moving their data into a data center onto the cloud. You look at what we're on now, Zoom, Microsoft Office 365. These are cloud services that are hosted in a data center. I mean, COVID has been good for the industry. You look what happened a year ago. Overnight, people went into lockdown, people had to start working remotely. This is what the cloud is built for. So no matter where you are, you can access your data, and this is all hosted out of a data center. What's also highlighted through COVID was a lot of people coming to us now and saying, look, I know my data is hosted in the cloud, but where is the cloud? Data sovereignty is starting to become a big thing. They know that cloud is the way to go, but is my data here in Australia? Is my data in the US? Is my data in Singapore? They're wising up to the fact that they don't need the added political risk of having their data stored in another political jurisdiction, which is great for us because with DC2, all your data is here in Australia. Next slide, please. So I'll get a bit more technical on this one and explain the difference between the tier 2 and the tier 3 facilities. So pretty much everything we've done to date has been out of our tier 2 data center in Osborne Park. Small little data center, 34 racks, a couple hundred kilowatts. It's been great for the traditional small to medium sized business that we've targeted. But what we get really excited about is our new tier 3 facility in BIBRA Lake. So in terms of the tier accreditation, essentially with a tier 3 accreditation, an independent institute, the Uptime Institute, they come in and certify that we can guarantee that your data will remain online 99.982% of the time. It's a really critical accreditation because it's a minimum standard for government, enterprise, and now even some medium-sized businesses. Traditionally, we couldn't go after this customer base because we didn't have the tier 3 facility. And that's why we get so excited because our new BIBRA Lake facility is going to be a tier 3 facility. At the time of listing, we announced it was going to be a 240 rack facility. We're now looking like we can get that between 240 to 400 racks. Another benefit as well, the previous owners of this facility, we've been told they spent between $8 to $12 million in CapEx fitting out the facility. We've picked it up for pretty much the cost of the lease. Next slide, please. It really will unlock that future growth for us. So we're a data center provider, similar to your next DCs. A data center provider, essentially what they do is offer co-location, rack space. You bring your own equipment, you bring your own hardware, and we'll just give you the facility to store that. The industry standard for that kind of co-location setup, you're looking at about $1,600 a month, give or take, but we are also a cloud services provider. We can offer networking, we can offer cloud storage, we can offer cloud compute, we can offer management. The end result is we start making more revenue per rack. We go from that $1,600 a month per rack, more towards that $50,000 a month plus per rack. Next slide, please. So what's quite exciting is at the time of listing, not only do we have existing customers, but also prospective customers coming to us saying, when are you going to get this new facility online? So 2 weeks ago, we announced our tier 3 facility is online. We've had 20 racks that are now available for customers. So those 20 racks are now online. At the time of listing, we took on a new sales manager. About a month ago, we took on 2 new additional sales resources as well. And we've said to them, get selling. So we expect this facility to be revenue generating shortly. What we'll do is in the background, we'll continue with the construction of the facility. So by Q3 of this year, that's when we get our tier 3 accreditation. And that's when we can go after the government, the enterprise, the much bigger contracts. Next slide, please. It really will transform our business. We're going to be the only provider in WA with our own tier 3 data center and ISO 27001 cloud platform. Currently at the moment here in WA, either you're a data center provider selling someone else's cloud services, or you're a cloud provider selling someone else's data center services. It's a bit more common over East. Companies like Macquarie Telecom, they're already doing this in Canberra, in Sydney. They're not yet doing it here in WA. It's a real value inflection point for us because traditionally we've gone after the small to medium-sized businesses, the businesses that spend 1, 2, 3, 4 grand a month. With our new tier 3 facility, we can go after government, we can go after enterprise. These are customers that spend 5, 10, 20, 30, 40 grand a month on cloud services. It's not uncommon for them to have $500,000 a year in cloud spend, and they like to be locked into long-term contracts. They like to have comfortability knowing that they're going to get that same price year on year. And it's great for us because it gives us that recurring revenue. The end result is, once this facility is accredited, we start to see some significant revenue growth. Next slide, please. What I'll talk about next is DC Modular. So this is our high density modular data center division. Essentially what we do is build containerized data centers and place them directly on power generation sites, solar farms, wind farms. By doing this, by placing directly on these sites, we access wholesale pricing. We say behind the meter, it is globally competitive power pricing. As an example, we can sell power to our customers cheaper than what we can buy it for currently at our BIBRA Lake facility. It's perfect for any high density computing. So it is becoming a bit of an ESG play. So DC Modular, we're already up in the Midwest on a wind farm. We've got 1 module up there, and from the demand that we've seen, we're building another 3 modules. Collie, that's a solar site. We expect that to be online this year in 2021. Victoria, that's a biogas facility, which we also expect to be online in 2021. What's been really encouraging is that since listing, not only have we seen strong demand from customers, and especially in the crypto mining space, we're also seeing strong demand from power generation sites. These power generation sites are coming to us and saying, we want you to put your modular data centers on our site. So we're seeing strong demand from both areas there. Next slide, please. So I'll talk about DC Soft and what we call the Microsoft opportunity. So with data center providers, cloud providers, Microsoft licensing is a bit different to what you probably know as a traditional business. For us, what we need to do is at the end of each month, an admin person or a tech person, they have to manually go through and calculate what Windows licenses they're using, whether it's a Windows Server license, RDP, Microsoft Office. They'll manually calculate all those licenses and submit that to their Microsoft distributor. It's a really costly exercise in terms of admin time. But then what also happens is that every now and then Microsoft will come along and audit you. And they'll say, look, you're using this many licenses, but you've reported this many licenses, there's a difference. And then what will happen is you'll cop a fine. For bigger businesses, the fine can be into the hundreds of thousands of dollars. It's a really costly exercise. So what we've done is developed a Microsoft supply reporting tool. So at the end of each month, you can click a few buttons and it will give you that license count. It cuts down on all that admin time, and it gives you surety that when you submit your license count to your Microsoft distributor, if you get audited, you're not going to cop a massive fine. So that's in the final stages of development now. Next slide, please. Lastly, I'll leave you with our near-term milestones, what I like to call our news flow. So BIBRA Lake, as of 2 weeks ago, that's online, 20 racks online. We expect that to be revenue generating shortly. We'll continue with the construction of the facility. So by Q3 of this year, we can get our tier 3 accreditation, and that's when we can start going after the government, the enterprise, the bigger contracts. Our cloud platform already launched here in Perth. We'll be launching one over East as well. So we'll be a national cloud provider, coast to coast point of presence. DC modular, we expect that to keep going from strength to strength. Already up in the Midwest, we'll send the additional modules up there. We'll get Collie online this year, and we'll get the Victoria site online this year. And then we'll begin to look at additional sites. Next slide, please. So look, everyone, as Tim said, my name is Blake Burton. I apologize for the disruption there, but yeah, I'd love to open the floor up to any questions now.
Thanks, Blake. We've got a question from Stella. Proximity to corporate offices and network connectivity are top of considerations when corporations choose data centers. Your company has fairly niche locations. Is the company targeting a more niche range of customers?
Yeah, it's not necessarily our target, but we actually do like the spot of this BIBRA Lake data center because we're right near the Henderson Industrial Park. So it's a massive, massive industrial complex here in Perth in WA. You've got companies like Austal, Mineral Resources, big companies. They're all right on our doorstep, which is great. Currently, in terms of network connectivity, we've already got Vocus lit up. We've got Telstra lit up in the DC as well. So yeah, we don't see that being a problem. It's actually where we are south of Perth, the BIBRA Lake facility is actually in a really good spot.
And just in terms of cost control for DC2, can you lock in energy costs for long periods of time?
Yeah, we can. It's definitely here in BIBRA Lake. In the Midwest, we've got an agreement where it locks in our price, and we're looking to do the same thing in Collie as well. So we get that stable, I think it's about 8.5 to 9 cents per kilowatt hour cost consistently. And then what we do is just mark up that price to our customers. What I'd personally would like to see, and what we've had discussions around, is as we start to increase our energy usage with these customers, we'll start to negotiate that price down. But yeah, at the moment, it's all locked in around the 8.5 to 9 cents a kilowatt hour.
And for investors who probably don't fully understand the technology side of things and the data, it's almost a yield play, isn't it, DC2? I mean, we've seen, was it NextDC, who were very successful in this space? You're basically selling kind of storage limits. So what is the plan to kind of expand around Australia?
Yeah, so we NextDC data center play, we're probably a bit more like Macquarie Telecom. So with a data center, you have really high fixed costs, and exactly, it does become a bit of a yield play because as you get additional customers on board, it really does start to free up that free cash flow. So for us, as a data center provider, like I was talking before, we have the co-location, which brings in roughly that $1,600 a month per rack. And we start getting more towards the $50,000 a month per rack. You do start to see some really, really nice gross profits and nice yields. So we'll have this integrated model here in WA. What we'll do over East, we'll launch a cloud platform first. We wouldn't probably build our own data center there just yet because it is quite competitive in that space. But we'll look at doing the integrated model here, cloud platform over East, and the DC modular will do it all these regional sites, these power generation sites.
And there's a question here, has the WA government shown any interest in using your new Tier 3 facility?
Yeah, so there's a GovNext panel. The DC used to be on the GovNext panel, which it lost that accreditation. That was under the previous owners. So we've picked it up just prior to listing, and then we're in the process now of reapplying for that as well. So once we get on that GovNext panel, that's when we can start going after state government. Already chatting to councils, the kind of local governments. But yeah, we have to get back on that panel to be able to get them on board. But it was previously accredited.